Hey, what's up, people? I go by the name of price earnings ratio. I chose the name price earnings ratios because it is basically the one of the most important statistics, I guess you could say, statistics, or one of the most important things when you're analyzing the stock. So the price earnings ratio is a relationship between the earnings per share of the stock and the stock price. So this tells you if the stock is overpriced or undervalued. And I'll talk about more of that later. You can put questions in the chat down there. First, subscribe and like my channel. And one other thing I want to say is I've been doing this for over 10 years. I've seen the downs and ups of the stock market. The one thing I want, reason why I'm teaching people is I'm teaching my method. My method may not work for everybody, okay, but I know it works. I'm very confident in the way I invest in stocks because I studied Warren Buffett. I study under some of the greats, and I read a lot of books on it. My experience, I got over 10,000 hours in it, and I love the stock market. A little bit about my background. I mean, when you invest in the stocks, you buy low, sell right, you buy low, sell high, right? So when I was like 9 years old, I remember going to the grocery store and buying stuff to sell, products like chips, zebra cakes, and stuff like that. It just had to be 1994, 1993. I can't think back. I'm 39 years old now, so I was always had this mindset, and I'm an electrician by trade. So, but I got into electrical trade based off a financial mindset. So this we're gonna talk about today. So the stock here, I put if you want to know more about stuff that my history and stuff, I'll go into it. But investing is a mindset. So I was always looking for somewhere to put my cash so it can grow. I didn't want to keep my money in the savings because it wasn't growing. So as I got older and got into the electrical trade, I started selling precious metals. One of the precious metals I was selling was copper. People don't understand that in the electrical trade. They don't understand they don't understand it like this. But the reason why I understand it like this is because I invest in the stock market. I invested um I research finance, so I can talk like this. See, I talk the talk. See, if you want to teach this stuff, you got to talk the talk and walk the walk. So I talk the talk and talk and walk the walk. So I can be speaking in financial language, and someone don't understand me. But that's not the key here. That's I'm just saying that's how it goes. So we're gonna get into precious metals. One of the precious metals is copper. You got gold. You got silver. All those are precious metals. Iridium, palladium. Palladium is what they're stealing out of the catalytic converters and stuff like that. So we'll talk about more of that later. But the stock I want to talk about today is GoDaddy. Ticker symbol GDDY. It also dividend stock called ticker symbol A as in Apple, R as in real estate, and I as in imperial, or uh, let's say idiosyncrasy, whatever you want to call it. So let's go here. Let me share my screen for a minute. Let's see. Bear with me. Bear with me. Hmm. We're gonna go to GoDaddy. Hmm. So GoDaddy. The first thing you want to know when you go to GoDaddy is you want to go to www.finance.yahoo.com. Okay. So as you can see, the ticker symbol is GD. This is the ticker symbol. It's just an abbreviation of the company. No one wants to type in GoDaddy Inc. all the time just to find this company. So they abbreviated it. Okay. This is the share price right here as of the closing of December 13th at 4 p.m. Eastern time. That's what time the stock market closed. Here is this is this is where the it's supposed to be This is the graph of the stock. So I'm gonna go. Let me go back out of this and change this to a all, so we can see get a better view of this stock. 1 second, because this only shows you the time from I think December. As you can see here, it says 1 day, 5 day, 1 day, 6 month, year to date, 1 year, 5 year, all. I'm going to go to all from the time. I want to see how this stock is doing from the time of its inception, the meaning the time it started until now. So let me go out of here and go back to once. Give me 1 minute here. Okay. So as you can see here, this graph is so slowly. It's how I like to see my graphs. There was a lot of stagnation here where the stock didn't move that much, but it probably wasn't the stock time. It wasn't the stock's time. Sometimes it's not a company's time to do well, even though it's a good company, but it's not its time to do well. For example, imagine if you would have had Tesla, which is an electric vehicle company in 2000. Let's just say 2001. Okay. Well, we all know it's a good company, right? But the world wasn't ready for Tesla yet. The world wasn't ready for an electrical vehicle car yet. We were still driving other cars and stuff like that. So no one probably would, not a lot of people would be investing in the stock because it just wasn't the time, you know. Or let's say artificial intelligence in 2001. People would have been like, no, I don't like artificial intelligence. I don't like robots and bringing me lunch and stuff like that. I don't want to. I don't like that. So they so they want to invest in it. If they don't invest in it, then how can they make money? You know what I mean? So here we go. So we got GoDaddy, which I guess it went public around 2016. Let's just see its inception. The inception date should be on here, but if it's not, remind me to ask me and I'll put it in the chat here. So when I'm analyzing this GoDaddy company, I like my graphs to be like this. See how it's slowly sloping up? There's a pullback here. There's a pullback here. It went up. There's another pullback here. Went up. Pulled back. Went up. Pulled back. So that's okay. As long as the company don't go bankrupt, you don't lose all your money. So I buy companies. The way how you should be looking at the stock market is to buy companies that are making money and that are handling their debt well. So a lot of you that are afraid to invest in the stock market, don't be. Just don't put all your eggs in one basket, as such as the stock market. You still have to diversify your stocks with real estate and other companies that other assets that give you passive income, or you may want to buy a franchise or go half on a corner store, whatever, laundromat, whatever you want to do. There's three ways to make money, or three ways to diversify. Now there's four. I'll say those ways is to start a business. That's one. Invest in real estate. That's two. Buy stocks. That's three. And you can say invest in cryptocurrency. That's the new wave now. But what I want to say to y'all is that if you don't understand cryptocurrency, then I suggest you stay away from it until you understand it, because I don't want you investing in something that you do not understand, because now you're speculating. How can you make money when you're speculating? There's as for me, there's certain asset classes that I just don't invest in. In cryptocurrency, I invest a little bit of money in it. I just don't invest a lot. I mean, I've made money. I made money because I started investing in cryptocurrency in 2016. So I've made money, but that's not what I like. I like the stock market because I can research it well. I can master it, and I know why I'm buying the stock. I'm buying the stock because they want to use my money to grow. And as they're using my money, I grow with the company, and I get a shares of that company. You know what I mean? So once I get shares of that company, that's more money for me and you. So that's just what it is. So we got this company GoDaddy. It's trading at $206.78. Okay, so here is below here is the dates of this. This is the dates. This tells you what the stock was trading at in 2016, 2017, 2018, and 2023, and so on. So here, if you see the $50 here, so we can just go across here. We say, okay, this stock was under $50 in 2016. It was under $50 as you see here, it's 2017. It started to go over $50 right here, just before it hit 2018. Then here it went up here to about $75 maybe, because this. So here the vertical part is the 50 is the price of the stock at the time, while the bottom is the dates. Here the vertical part is the price of the stock at the time, 50, 100, 150. So we go here, right here, the stock had to be about probably $80 a share. Let's just go here. Let me just show you for myself, for you, so you can see. 1 second here. So right here, um, right there. Man, why did they do that? Just the max. So 2000, right before it hit 2018, right there. Can you see that? See right here is $50 a share. $50. If y'all can't see me, I'm pretty sure you can, but if you can't see me, I'll do another video on this. But I had to step out of the studio part so I can play with these numbers. So here it says 2018. You can hover over this like this. It says this is, as you can see here, it says at the bottom of the year 2018, it says 11 2017. That means the month in 2017, somewhere in that month, they don't say which date, this stock was trading at $43.43. Okay, so right here, um, right here, somewhere at November in 2017, it hit $50.55. I wish they would tell me that date. I guess they won't, but it's okay. So let's go here. Here, this is August of 2018. It stopped with the $82. Okay, listen, listen to me. It was $82, right? But that's August of 2018. But look at here, October 2018, it went to $65. So the this will scare some people out of the market. That if you put let's say you put $1,000 in here, and you get a bunch of shares at $82.39, and it dropped to 66. This will scare a lot of people. In order to not be scared, don't put all your money into one stock. Put a little bit of your money, and I'll break down more. They said 8 to 10% of your gross. If you get paid every 2 weeks, and you get paid, let's say you get paid $1,000 every 2 weeks, pretty low, but just for example. So what's 8 to 10% of $1,000, right? So let's just say you get paid every 2 weeks $1,000. So 10% of 1,000 would be 100, right? We do the calculations. 10% is just basically, if you move it 2 decimals to the left, 10 is, you move one decimal, um that's 1.0, that's one. Move another decimal, that's 0.10. So you say 0.10 times $1,000, what you put in, equals $100. Always keep a calculator. Okay, so this is actually a good. It's actually a good company. I'm gonna show you why. So don't run away from these price drops. Stocks, no stock goes straight up. There's always pullbacks, and I can teach you how to read these more graphs later because I have a stock market course coming out. I want you all to sign up for it. I love what I do. I know what I'm talking about when it comes to stock market. A late disclaimer: This is I am not a fiduciary. I am not a stock market advisor. This is educational purposes only. But I love what I do. I know this stuff. Okay. So it's 2019. In March of 2019, the stock went back up to $80. You see what I'm saying? That's like so it dropped in October of 2018. About 5 months later, it went back up to $80 a share. It dropped again here somewhere. I'll get more of this, but look what the stock is right now. Years later, $206. That's why I don't want you all to trade. The difference between trading and investing, trading is you buy a stock one day and you might trade it the next day. That's day trading. Or you might buy a stock one day and you might trade it next month. That's kind of like swing trading and stuff like that. But the people that do the best is the ones that invest a good amount of money in this stock and let it sit, let it ride, so that way you can get these type of gains right here. Okay. Okay. Let's go here. Another reason why I like this stock is that 1 second. We're gonna go somewhere else here. We're gonna go to the most important thing. This is the most important thing when you're looking at a stock. I want you to I'm gonna brief over this real quick. These statistics down here, just tell you what it previously closed at. $208.91. Just tell you what it opened at during the day, $209.08. Okay, bid ask is not there. Days range. I'll break this down later, but look at this 52-week range. So it's saying that in 52 weeks, which is 1 year, 52 weeks in a year, in 1 year, it was $99.90. The range now is at $210.30. This beta right here tells in five year monthly beta. I guess they were saying maybe they mean if it's 5 year beta, that beta is 1.11. So beta measures the volatility of this stock compared to the stock market, and a beta of 1 is kind of volatile, but there's betas that are 2.5. They're very volatile. So the beta is really judged based from 0 to 1. So any beta under 1, any beta under 1 is low volatility. That means if some bad news comes out about the stock, it doesn't drop a whole lot. So, but this is not bad. 1.11. If you don't mind handling some risk and you can stomach this, it's not bad. But this PE ratio is another one of the most important things you need to understand. So this is price earnings ratio. They say PE ratio for short, but it's really called the price earnings ratio. And all that's saying is that you take the stock's price, which is $206.78, right? $206.78, right? And you divide the stock. That's the equation. That's an equation. That means price. That means price of the stock over earnings per share. Earnings per share, EPS. It's right here. So you'll take the price of the stock, which is $206.78. You'll divide it by EPS, which is it's supposed to be EPS. I'm sorry, 12.47. 12.47, and you'll get this number. You should get this number or close to it. So let's do that. Divided by 12.47. If you can see this, my calculator, that's 16.582. All right, round it off. That's how you get that number. Just and you're gonna it's gonna take time. You got to learn this over and over and over and over. One thing about learning is that um, there's repetition is the mother of learning. So in order to master something and learn it, you have to do it over and over and over again. Don't let that scare you. Okay. This is another thing I like. Market cap, intraday market cap. So this market cap is 29 billion, 29.03 billion. That's 29 billion pretty much. So what I want to introduce you to something called there's certain stocks I don't buy, and that's stocks that have a market cap of under $1 billion. I really don't touch those stocks. I rarely look at them. Why? Because they're very volatile. They're new companies, and this market capitalization, you will find this by multiplying the stock's price by the outstanding shares, meaning the amount of shares the company has. And we'll talk about more about that later. I don't want to confuse you, but I'm just telling you, if you sign up to publications like Motley Fool, they don't recommend stocks that are under $10 billion because they haven't weathered the storm. Here's what I want to say. This right here is considered um, a large cap stock, which is fairly safe. You want it when they say invest in large cap stocks, they mean the large cap stock has a I got some notes here. I'm getting dry. Excuse me for a second. I gotta drink a little water. Excuse me. So large cap stocks have a market cap of $10 billion to $50 billion. $10 billion to $50 billion. That's a large cap stock. This is what that is. Now there's micro cap stocks. Micro cap stocks have a valuation or market cap of under 250 million. That's million. I stay away from those. I don't stay away from them, but those are called penny stocks. Now I'm a little advanced in a lot of others, and I do look for penny stocks. You can make a lot of money with penny stocks, but you gotta know what you're looking for. And I'll talk more on pennies. That's a subject of its own. Penny stocks is a subject of its own. See, the stock market is so vast that you got some people that investing in penny stocks. You got some people like myself also investing in stock options. You got some people like myself are writing the options. I write cover call options. I I perform cash secure put options, so I sell put options. There's a lot of stuff I do with the market, but you got to crawl before you walk. I've been in the market over 10 years. I've been in the stock market over 10 years, so I earned the right to be able to do this stuff. And I study it. I'm serious about it. So I earned the right to do that. I earned the right to make a lot of money. I just want to make use of money. So pause. Let's just say that. Okay. So again, micro cap stocks have a market cap of under 250 million. Small cap stocks have a market cap of 1 billion to no of 250 million to 1 billion, and those are your Russell 2000 stocks, which they're in the Russell 2000. That's an index for small cap stocks, and I'll probably do a broadcast on that separately because I don't want to go too long. Mid cap stocks. That's what if you can handle some risk, this is a great field to be in. Mid cap stocks have a market capitalization of 1 billion to 10 billion. Okay. Then you got large cap stocks, which is this one, has a market cap of 10 billion to 50 billion. Then you have ultra cap stocks. Any market cap over 50 billion, like Walt Disney, Microsoft, all of them are what you call ultra cap stocks. You know, the best of the best. Okay. I didn't want to stop sharing. All right, let's go back to that. I didn't mean to stop here. Okay, so let's go back to GoDaddy. Again, I want to this this is the stock market, people, and put some feedback in the comments and let me know how y'all feel and ask questions. I know a lot about this stuff. I've invested in companies. I invested in Apple in 2015. I took $5,300 that I had sitting there. I was gonna buy a diamond watch. I was gonna buy a diamond ring for $2,000. I was really gonna buy that diamond ring, but I seen what they're gonna see a certified financial planner, certified financial advisor that owns his own firm, and he happens to be black. Yeah, I was glad to see that because somebody that looked like me teaching me. He's very and he wanted to teach me. He didn't because we wasn't in the field a lot. So he taught me a lot, and he told me don't buy that ring. So I had $100 invested. He told me go get the $100 back, but I never got the $100 back for that ring, and I just never bought the ring. But that I took that $2,000 and added another um, $2,300, no $2,400, which was $5,400, and I gave it to him, and he invested in Apple for me. That $5,400 investment right now is now worth 30 some thousand dollars. 30 some thousand dollars from $5,300 to 30 some thousand dollars. Listen, time. You have to be patient because the stock market belongs to the patient. I mean, it's 2000. That was 2005. I mean, that was 2015. Now we're going. This is 2000. This is December of 2024. That's 9 years. A 600 some percent return. It's a good company. I'm gonna show you why this is also a good company in a good company. Let's go here. We're gonna go to this company's financials. Okay, I want you all to be able to read this stuff. See the financials here. Okay, the reason why I like this company is because I look at this is called the income statement. So you got the income statement, the balance sheet, cash flow statement, and dividends, if any. They lock this right here. I mean, you got to pay for this. It's all right. I'll pay for it later. So in December 31st, 2020, this right here, you have to add, this is in thousands. So you have to add three zeros to this. See, all numbers in thousands. So whatever this is, add three more zeros to it because 1,000, you have to add three zeros to make 1,000. So just add three zeros to this. So this is right now it's saying 3,316,700. No, it's really 3,316,700,000. And here, same. So this is growing. So as you can see in 2021, the revenue is steadily growing. I typically like to see a 10% return in revenue. So let's just see how much percent this is. Let's just see. So 3.3, um, so 3 billion. So 3,316,700,000 times point 10, because that's the percentage. Okay. Um, let's just see here. This is on my phone. Let's see here. 1 second. So I have to add some things. So I'm just give what they got here. It said 3 million. That's for simple terms. 3 million. It's really 3 billion though. I'm just saying for simple purposes. I'm gonna say on my phone. I'm gonna say what's 3 million, 3.3 million times 10%. See what they say. So 10% of that. Okay, it makes sense. 10% of 1 million of 3 million is $331,000. So you'll add $331,000. So um yeah, so add $331,000 to this, and if this number is bigger than that, then they beat the 10% parameter. That's very good. And I'm gonna touch on more about percentages, and I'm gonna break it down later. Just for now, I don't want to complicate it. I love that. I used to love math, so it's been a long time, but since I've been in high school, but still love math. So you got this is growing. Revenue is 3.3 billion this year, 3.8 billion this year. 2021, 2022 is close to 4 billion. 2023, 4.2 billion, 4.4 billion. TTM means time to mature. So that means it needs time to mature. The year is not over yet. As soon as the year is over, they will update this and put 2024. See, see a relationship? 1231, 1231, 2021, 1231, 2022, 1231, 2023. It's not 12, it's not December 31st yet. So when December 31st, when January 1st comes, 2025, they will update this, you know. And I got to do a whole breakdown of this because they do things quarterly. And I just want y'all to see that. So their revenue is growing every single year. I love it. Okay. The cost of revenue means cost of doing business. This is probably the monthly expenses. So when you take the total revenue minus the cost of revenue, you get the gross profit. So this is like the net profit I believe that the company is making annually. So after their expenses, so this is their total revenue. But total revenue, you got to invest back into the business. Okay, let me just go here. 2020, you got to invest back into the business. So let me go here because you can see these numbers. You can see the total revenue here, cost of revenue. You can see it better as if I go over here. So 4.4 billion total revenue. The cost of revenue 1.6 billion. So this minus that equals this gross profit. This is how much they made. This is how much they profited year to year. You can see this is growing as well. I like to see that growing. Operating expenses. This is how much they profit after everything. They may be paying also for real estate, because they a lot of other things. So I'm gonna get more on this gross profit right here because operating expense is really what that means. This is the expenses to operate the business. This stuff right here. Now I'm gonna get it more. I'm doing a breakdown on this whole financial statement, but I'm just getting y'all familiar with what I like to see. Let's go to the balance sheet. One second. Balance sheet. Okay. Um, Total assets. This is what I like to see. This is the total assets of the company. It's growing annually. 2020, 2021, 2022 is 6.9 billion because you got to add three zeros. It's all in thousands. So this is really 6,973,500. Add three zeros. It'll be 6,973,500,000. Okay. So I like to see that growing. The liabilities, you have to calculate that in. You have to calculate this in because net worth for the company would mean total assets minus the total liabilities. So you got the total assets minus total liabilities of 2023. They're in a positive. This is 62,000. This is in a thousands. Remember, this is really 62,200,000. Now in 2020, it was 11. It was negative 11. Add the three zeros, 11,800,000. 2021, they was positive. This was really good. 83,200,000. Remember, to add the zeros. Somewhere in 2022, it was bad for them. I don't know. Must have been a bad year, real bad year. And you got to look at this. You have to look at this stuff. So it was kind of bad. And I would, and as a stockholder, I would look at this and say, I don't like this. I don't like this at all. I'll be honest. You, you have to be honest when you're investing. But they cleaned up their act, excuse me, in December 31st, 2023, when they reported 62,200,000. That is really good as a bounce back. Okay. And the 2024 is not over with, so they can't report. So I'll be looking for those numbers. I got to see what they did. Now, debt. How are they handling their debt? A company that doesn't know how to handle debt well goes out of business. So right here, their debt is 3 billion. Remember, this is even as in millions. It's supposed to be in. Got to add three zeros, so 3 billion, 3.3 billion. I mean 3,322,600. 4 billion, 3.9 billion. So they're decreasing their debt. I like to see that. This is the net debt. This is how much they actually owe in cash, and it's increased a little bit. But remember, their total assets has increased too. So it's looking like a pretty all right company. I would say, yeah, invest in it. Invest in this. Don't invest all your money in this, but I like this company. Last but not least, okay, let's go here. I want to go somewhere else. Two other places. Holders. I want to see who is invested in this company. So holders. This tells me major holders. So less than 1% of the people that's employees in the company own GoDaddy. If they know like I know, they get stocks cheaper than we do, and they get a lot of incentives. So if you're in the company, why not invest? Why not have their company? Why not see if the owner of GoDaddy will match you? So that what I mean by match, that means that if you put $1 in the stock market to invest in the company you work for, GoDaddy, see if they will put $1 too, and see if you put in $10 in, see if they put $10 also. And you know how do y'all know how valuable that is? We can't get that on the outside of GoDaddy. If we're not employees, we can't get that. But the reason why a lot of those insiders don't do that is because they don't understand the stock market. I'm here to teach you. Okay, 99.54% of shares held by institutions. Whoa, that's a large number. So that means that institutions is like Vanguard, BlackRock. We know these, Morgan Stanley, Morgan. So we know that banks take your money and invest in the stock market, or they invest in real estate or other stuff. They take your money and invest it. So these are basically investment banks and investment firms who have taken a stake in this company because they like it. Nobody invests in the company that they don't like. Percentage of float held by institutions. I'll cover that later. Float just means floating shares. I have to cover that later. I think it means that the I have to cover that later. I think float. It could be a little confusing. The, let's just do this. Let's just go here. Let's just go here. What is a float? What is a float? And I'll expound on it later in the stock market. I don't like to leave people in the blind. Okay. So if you see here, float in the stock market refers to the number of public shares available for trading in the open market. So that's what I thought it means. So let's say they gave the company 1 million shares, but a lot of the companies already bought up 500,000 shares. So you only got 500,000 shares left to trade. So this is what that means. This is the number of public shares available for trading in the open market. And a lot of these shares could have got taken up by people who invested privately. So, which is accredited investors. An accredited investor has a $1 million net worth, or they have $250,000 that they're making annually. This will consider you an annual. This will consider you an accredited investor. If you're not an accredited investor, then you can't get in on this, um, on as a private investor. You can't, angel investor, whatever you want to call it. So they could have took like 50% of the shares and said, okay, we're gonna sell the rest of the 50% of the shares to the public market, the open market. Okay. Okay, here. It excludes closely held and restricted stocks. We cover that later. It tells you how many shares can be bought or sold at the present moment. So this is how many shares they got left. This is how many shares. This is what it is. Okay, so let's come back here. Um, come back. Lastly, I went over. I just like I'm covering this stock, so that's just what it is. We're gonna go to the company's website. You should always go to the company's website to see what's going on. So the company's website profile. Okay. Sometimes I will I will write certain numbers down. Let's just see here. No, this is the wrong company. I want to go to GoDaddy. Where is it at? Okay, GoDaddy profile. So here, GoDaddy, it tells you where the company is located. 2155 East GoDaddy Way, Tempe, Arizona. So that means if you go to this address in Arizona, you'll go to that company. You could pull up. You can pull up on that company. Hey, what's going on? I want to see how it was. There's questions I got for you all that you can ask to see how the company is doing, like the number of employees. So I will write this down. I want the number of employees growing every year. And because if a company's employees are growing every year, that means the company is growing. Okay. So this right here, when you go to profile, it tells you a lot about the company. It tells you where the company is located. You can call them. You can call them up. And I got questions y'all can ask, and I'll put that in my course. So that way there's questions that you can ask a company, just because to see how they're doing as an investor. And I'll put that later. Um, GoDaddy.com, we're gonna go here. But the sector, so the sector is technology. You got technology sector, other sectors you have energy, etc. And I'll cover that later. Industry, does it have the industry? Oh, the industry is software infrastructure. That's what they call this, employees. So we're gonna take a trip to this website, people. So this is GoDaddy. So when you're buying a stock, you gotta know how the website is doing. Look around the website. What's this? Domains, email, hosting, and security, commerce. You got commerce here? What is this? Point of sale systems, tap to pay mobile app. Or you can, oh wow. Easily take contactless payments with just your smartphone. That's interesting. So use tap to pay with the GoDaddy mobile app to accept contactless payments, to accept contactless debit and credit cards, plus Apple Pay, Google Pay, and other digital wallets right on your iPhone or Android phone. It's easy, secure, and private. So I want to see, are they offering this app? This is interesting. So you always want to see what the company has. What they have, what are they offering? Are they are they the best in their industry? Are they the best in their sector? Are they taking market share from their competitors? All this stuff you want to know. How to accept payments. Get the GoDaddy app. Okay, I understand that. So are y'all acting as like a square? That's I'm gonna look more into this, but I still like this company. That's commerce. So they're making money. Are they making money from contactless payments? That's what I want to know. That's not bad. Card reader. Meet your pocket-sized salesperson, sales partner. Okay. Huh. Oh yeah. They got card readers. So let's say you go to a store and buy stuff. That means that they got their own card readers. That means instead of going through Visa and all that, this is what I'm thinking. You can swipe through the GoDaddy. I'm gonna look more into this. This is good. This is good. Okay. Anyway, let me stop nerding out right here. I'm gonna go all day. GoDaddy Arrow, buy a domain, then instantly build a website. That's interesting. So GoDaddy, you can build websites. People use GoDaddy to build websites. So that's enough on this company. Any more y'all want to know? Just put in my description, and please like and share my videos. Like and share them. Anything you want to know about the stock market, don't feel free to ask me. I went well over this time, but it was well worth it. And y'all take care. Peace.